Once again, good evening, everyone. My name is Yogesh, and thank you so much for joining this session of World Investor Education Week, Day 4. Today, we are going to talk about technical analysis. And in last 3 days, we have talked about the product library, how many kinds of products are available for buying, selling, trading. We learned about how to create a watch list. You got your demo accounts, you started using your demo accounts, you created watch list. We got to know what are the market timings, which are the great hours to look at the markets. We talked about fundamental analysis, what kind of news you should be looking at. We also talked about how to buy and sell and what is margin trading and leverage. A lot of you have done one-on-one sessions today with me. So I literally finished one last session and I have joined this. So it's amazing, actually. Really good to see how many of you are actually going for this and having one-on-one sessions and are trying to catch up on what we have discussed in last 2-3 days. So I definitely encourage this. Please, if there is anyone who is joining day 4 directly and you want to know what happened in the previous days, we can have a one-on-one session after this, maybe tomorrow first half, and can definitely bring you up to speed what we have discussed about. So we talked about how to buy and sell. We talked about short selling, that how you can sell first, and when the price of something comes down, you can buy it back and book profit. So either way, today we are going to talk about technical analysis, which is very different from fundamental. It's about studying the historical prices. Again, before I start, I want to make sure everybody can see what I'm sharing. I want to make sure that you can hear me properly. Same drill. If you can give me a yes or a okay, I will be ready to proceed. I hope everybody can hear me clearly and there's no network congestion. Please keep your notepads ready. Exactly the same thing what we have done so far. We keep our notepads ready. We keep writing, and whatever questions you have, a lot of you have been emailing me a lot of questions, and I'm happy that I have been able to answer that. So just 1 second. Okay. I hope everybody is able to join. Yeah, great, perfect. Okay, so you can see my presentation. You can see everything. That's great. Now, today we are going to talk about technical analysis, and we are talking about charts. We are talking about patterns, and technical is, before I even start, let me put this right. It's not something which you must know, because there are like hundreds of technical studies. There are at least more than 30 candlestick patterns. And more than that, there are so many oscillators and indicators and lines. So not everyone has to be an analyst to understand how markets work. So technicals is not something that if you don't know is going to create a big difference. Because there are a lot of analysts which are looking at fundamental news and taking their decisions. All you need to know is a very basic understanding of technicals, and so basic that you can look at a price chart and you will know that this is not something for which you have to study for. Of course, depending on your interest, you can dig much deeper, get much into it. But please understand this, that it's not something which you must know. There are consultants who always take decisions looking at fundamentals, and then they look at the price patterns, and it just helps you out. I have a lot of people today who are saying this is the first day. Don't worry, if it is the first day, you start where we are starting from, and then call me. We'll have a one-on-one session, and I'll bring you up to speed what we have discussed in last 3 days. So don't worry about it. Just go with the flow, and I'll try to make it as simple and as easy as it can be. Please understand this. Whatever I'm going to teach you about technical analysis, a lot of this depends on the historic pricing, and it is not an assurance or a guarantee that you are going to make money this way. Okay, this is again one of the strategies which we have discussed a lot of times in the financial markets, and all I'm trying to do is just trying to educate you and aware you that how this works. So please do not do any trades on the basis of what I am teaching you right now. You definitely should look at your risk appetite, your risk tolerance, consult your consultant, and then only proceed forward, right? Now, let's talk about technical analysis. Please do write on the chat window if you have any questions. And I gave you one assignment yesterday. Now, obviously, I cannot see everything, so I'm just hoping that you are up to speed on the platform. I'm hoping that you have created your watch list, you have done some trades, you have short sell, you have bought, you have put your stop losses, and tell me how it worked out. If you remember, we did a couple of trades yesterday, and let's see what is the updated information about it. Again, why I want to see it is just to show you that how markets change every day, and US market is already open right now, so I think we can definitely see what's going on. Okay. And something really good which I like to see is not making money in the demo, because if people see that demo makes money, then they have certain expectations, and I don't really like to have expectations. Perfect. Okay, now I'm going to show you something really crazy here. Okay, how many of you took trades in the demo? Use your chat options to talk to me. How many of you have done trades in the demo yesterday? And please keep writing any questions or queries if you had. Okay, I have. My screen is not coming. Oh, okay. Okay, okay. Tried but confusing. Okay. No, it's not stuck with technical analysis. This is the slide which I have. I will start this slide, so I hope everybody can see this. Okay, tried but confusing. Okay, no problem. Write it down where exactly you got confused at, and once I finish the technical analysis, we'll repeat the drill and try to do the trade again. So nothing to worry about it. Okay. So the whole point of doing the trades yesterday, why I asked you to buy and keep short selling and keep putting stop loss, it's not to understand how much you make money, how much you lose, just to make you familiar with the platform. Okay. And this is something which, again, you can keep trying day on day just to make yourself familiar with the platform. And tomorrow we'll talk about all the trading strategies, and let's today discuss about the technicals. I did not see profit on gold. Could see on your screen. Oh, no, my screen doesn't have profit either. Let me share it with you. Markets changed completely. So if you see right now, look at my screen. I hope everybody can see this. Let me zoom in. See, if you see, yesterday I bought gold at 1782. What is the gold price today? 1781. Let's see my watch list. So yeah, let's do this drill first. What is the gold price? What is the lowest today gold has gone? What is the lowest gold has seen today, guys? Go for it. Watch list is open. What is the lowest gold has seen today? Okay, perfect. 1779, 1779.41 exact, 1780, 1779, 1779. Okay, perfect. Great. Okay, amazing. So what we are looking at today, the lowest gold has gone is 1779. Highest it has gone is 1794. So if you remember, I keep telling you that gold moves easily around $20 in a day, right? So if you see the highest 1794, lowest 1779, so it moves around $15, $20, $20, $25. And while we talk right now, it is 1780. If you remember, on the day one, those who were there on day one, what was the gold price we saw on day one? Think about it. What was the gold price when we saw on day one? So as per research, the scientists say that whatever you read, you have to keep refreshing every 3 days to have maximum retention. So as you can see, I keep asking you every day the same question, so you will remember it. 1784, 1785, 1789 is the right answer. It 1786, that's right. 1786, 1787. Yesterday it was around 1784, 1785. 1795 was the highest. So now you guys are getting familiar that it is between 1780s range, 1785, 84, 85, 84, and go on. I will keep asking you for the next 2, 3 days again and again until you see today, right now, what's the price? 1779. Current market price 17 cents 79. For the first time, it looks like it is going below 1780. Since Monday until now, we have seen that it has been between 1780 to 1790. But for the first time, it looks like it is breaking 1780, right? So now see what is the closing today. If it is below the average range, then see how it works out tomorrow. Okay. Now, so this is gold. Tell me about Bitcoin. What is the lowest we have seen Bitcoin today? What is the lowest price we have seen Bitcoin today? If you have created your watch list, you'll be able to see. Otherwise, you can check my watch list and tell me what is the lowest Bitcoin has gone today. 44,122. Perfect. 44,122. And if you see the current price is 45,090. So, which proves the point, it's moving easily $1,000 a day. So, you buy one Bitcoin, might make $1,000 profit. If it goes against you, might make $1,000 loss. So now you know how much on an average Bitcoin moves, right? Because you are seeing these prices every day, the lowest, the highest, what is the current price. That is only the reason that why I keep asking you every day. So you get familiar and you keep checking these prices every day. So you know that what is the range. There's a question: if markets open and close in different time zones, which one follows the close and open? No, so the closing, what you see here is UAE time. So let's say you can go to the product overview and you will be able to see that what time the market closes. So US market, for example, closes at 12:30 a.m. and starts at 5:30 p.m. Europe closes at 7:30 or 7:40. So most of the time, Europe and US stocks, you will see their closing times. As far as currencies and commodities are concerned, somewhere around 2 o'clock they close, and then again the trading resumes within a 1 hour or so. So their opening and closing prices might be very close to each other. But you have to see now. See what is gold. The moment it broke 1780, look where it is right now, 1778, right? So that's the sentiment which we are working with. In last 3 days, 4 days, you saw gold prices between 1780 to 1790. But the moment it breaks 1780, what the investors Right. Okay. Am I audible now? Okay, great. Oh, I lost. I lost 6 attendees. I am heartbroken. Technology defeats me. I'm so sorry. This is something which is a new problem. Webinar Jam is an excellent software, but I think it's sometimes it's very congested. Okay. Oh, great. I gained my audience back. Great. Perfect. Thank you so much for waiting, guys. Okay, great. Let me just add my slides as well. Okay, perfect. Okay, and there. Start. And there is my screen right here. Okay, we're back. Great. So what I was talking about, that what you see gold prices while we were talking about it. Look at the low now. It's not 1779 anymore. It's 1777. It went down to 1777 the moment it broke 1780. Why? Because in last 1 week we have been seeing gold from 1780 to 1790, and the moment it breaks that 1780, it starts going down. Why? Because the investor sentiment now towards gold slowly becomes negative, because they see that last 3-4 days that range from 80 to 90 has been broken, so it might go down. So there is a massive selling which starts. So that makes gold prices go down very quickly to 1777 before it recovers. Now, today what we are going to discuss about is technical analysis, and this is what technical analysis is all about. It's about understanding the historic pricing. Okay, we are going to use the charts today, and so I'm sure those who have your demo accounts in last 2-3 days, I'm sure everybody has it. Those who have joined today, don't worry about it. Just keep clicking pictures, and I'll give you a demo account soon after we end this session. Now, why we need to understand about technical analysis? First and foremost, what it is. Technical analysis is more like predicting the probable future price movement of a commodity or a stock or a currency based on the historic data. Okay. Now, what is this theory behind the technical analysis? It is very simple. Using the historic pricing, we try to find out that which price has been good for buyers and which price has been more favorite for sellers. And on the basis of that data, we buy or sell. Basically, we enter or we exit because that price is considered as the fair value, right? Now, what technical traders, they believe that whatever is the current or the past price action in the market, it has been the most reliable indicator. Okay. Now, I will give you a lot of examples over this. Look at this. So every technical, I told you that if you don't know about technical analysis, it's not a big deal. If you're not interested in it, it's not a big deal. If you never get to learn about technical analysis, it's not a big deal. Why? Because technical analysis is based on a lot of assumptions. And one of this assumption is that history tends to repeat itself. What does it mean? It means that if I have seen gold prices coming down to 1780 and bouncing back again and again, if it has happened 3 times, and I am a technical trader or I'm a technical analyst, I will believe that 4th time when it comes to 1780, it will bounce back. So let me buy it at 1780. That is the assumption, right? Because I believe that history will repeat itself, and it's been 3 to 4 times that price has hit 1780 and bounced back. So I believe that because it has happened in the past, it will be replicated in the future, because I assume as a technical analyst that history tends to repeat itself. One. Second thing, that the price always moves in trends. So there is either the price will be moving in uptrend, or it will be moving in downtrend, or it will be moving in sideways trend, but it will always move in trend. Why I assume it? So that I can identify whether it is good to buy right now because it's an uptrend, or it's good to sell right now because it's a downtrend, right? And then comes market discounts everything. So what technical analysts, they feel that there is no extra adventure in the market, no insider information, no news, nothing can actually move the prices on the basis of that. Market moves, it has discounted everything. So the price what you see right now is the price which is after all the information which is declared. So it discounts everything. Now, that being said, let's try to understand first and foremost. Now, I'm sure all of you have seen charts and it has been bothering you right now that what is this red and green candle goes on, right? I would request all of you who have your demo accounts here, and since I have been covering a lot of times about gold now, so let's start with the gold again. Click here on these three dots. Okay. Look at my screen before you look at yours. Look at these three dots. This is the menu for everything. And click on chart. And you will see a chart opening here. Now you click on maximize here. So your chart maximizes. And I'm going to do this again for those who missed it. Once again, let me close this out. You look at your watch list, you're looking at gold, click on the first three dots here, which is your menu. Click on it. You click on chart and you can see gold prices. You can maximize and minimize using this two arrows. I hope everybody with me on it. Everybody who have the charts right now, give me a yes or a okay. So I'm sure that a lot of you have or are looking at it. Go for it, guys. Open your chart and we'll understand technical analysis live, and you will realize that it's just a piece of cake. Nothing different. Okay, let me tell you one more time. How do you do it? You are on your platform, you're looking at your watch list. Those who have not created a watch list can search right here on your search option, write gold, and you will see gold cash commodity. Moment you click on it, it will open directly with a chart. Those who are already on the watch list, look at gold, go to these three dots on the left, click on it, click chart, and you'll be able to open it. So now I hope everybody is there. If you are on mobile, I will explain you app differently, but if you're on mobile right here, let me very quickly tell you over here on my phone how you can do it. Okay, this is, so for those people who are using the app on the mobile right now, how you go to the chart, although it will be easy if you're using the desktop version first, so you get to see all the available features, and it is much more bigger and clearer, right? So I hope everybody is opening their chart right now. Okay, now this is for those people who are having the phone right now. So this is gold. So if you see, it will look something like this. And the moment you click on where it is written as gold here, the word, you click on it and it will open the chart right here. Where you see the gold is written, you will be able to open the chart. Just tilt it on the horizontal so you can see it properly. But I would still suggest look at the screen, which is web version. Now, once you have opened the chart, if you can see here, there is an option on the bottom right corner which says zoom in. Don't zoom in right now. Let's try to understand first what are these numbers, what are these horizontal and vertical axis. I think you can easily understand this. The right vertical axis here on the extreme right tells you the prices, the current prices. Okay, let me try to increase the text if I can. Settings, cursor, font. Okay, large. Okay, I'm increasing my font so you can see. Okay, let me make it very large. Okay, now it should be visible to everyone. So on the right side of the vertical, what you can see is the price, and the horizontal on the top are the dates. How do you know now? So all you have to do is, now you go to the bottom right, extreme bottom right, second last option, which says cursor, show/hide chart cursor. When you click on that cursor, you will get something like this. Okay, something like this. Once again, bottom extreme right, second last option, show or hide chart cursor. So this is the chart cursor which you will get. Everybody with me? Everybody with me? Everybody can see this chart cursor right now? What it helps you with? It helps you whichever date you go at and keep the cursor on, you will see that at that particular date, what was the price of gold, right? It helps you out to understand this. So I hope everybody has this cursor. Once again, you will see this cursor here, extreme right at the bottom of your chart. Now, if you have a mouse, you can zoom in using your roll option, or you can just click on the plus again on the bottom right corner. There is a zoom in option, okay, and there is a zoom out option. You will see as you zoom in or zoom out, on the top left, the duration right here, which says 12 months right now, 10 months right now, it keeps changing when you zoom in, zoom out. What is this duration? This is the history of the prices. So when you say 12 months, it means that you are looking at the price movement of this gold commodity for last 12 months. So if it is August 2021 right now, you are looking at the pricing of August 2020, right? We are looking at 12 months. I hope everybody is with me on this. You're able to understand this. Please do write on the chat window. If you miss something, I'll explain it to you again. So once again, you're looking here. Look at this, 12 months. So if I zoom out again using my minus sign here, it becomes 2 years. If I zoom out further, it becomes 3 years. Zoom out further, it becomes 4 years, right? So right now, I'm again using the plus sign. It shows me 12 months. You can always increase or decrease. Now, let me explain it to you. What are these red and greens and how it becomes red and green? When you zoom in, you will see that what these bars, they look like. So this is called a candlestick, okay? This is called a candlestick. And what is the significance of a candlestick? I sincerely hope that none of you have to ever do this. But let's say when somebody has a heart condition, they get their ECG, right? What does ECG shows? It shows you the heart rate, how the heart beats, and the consistency, right? Exactly what you see right now is how the price moves every particular day, right? So this is the market pulse. How you calculate your pulse, this you can understand what it is. It is the pulse of the gold, how gold moves every single day. Okay, so this is exactly how it looks. Now, once again, let me explain you how candlestick works. I know by now you must have zoomed in and see how candlestick look like. So it will resemble to what I have to show you here. Okay, now look at this. For now, forget about everything. Just look at what I'm showing you to you. There are two candlestick patterns here. One is black and white, one is blue, one is green and red. Okay, forget about black and white for now. So you don't have to learn which is traditional, which is modern. Just look at green and look at red. So if you're looking at a traditional chart pattern, it symbolizes with black. The upside potential is shown with white. The downside is shown with red. Downside is shown with black in a traditional chart. But now modern platforms, they have green to show upside, red to show downside. So you just focus on red and green. Don't worry about what is traditional and what is modern. It is hardly of any importance. Now, what a candlestick signifies? First of all, you look at this candlestick as you are looking at a price of something. Okay. If you are looking at a gold candlestick, then what that candlestick represents, it represents the price. Now, what does the price represent? Let me show you here. Now, why I made you see your watch list first. Everybody go to your platform and look at the watch list. Everybody go to your platforms and see the watch list and look at the gold. What is the first column you see? And write it down on your notepad so you can test the same thing when you are making a candlestick. Okay. What is the first thing you see right now? The lowest of the gold. So write it down on your notepad. The first thing I see is low. Second column you see is high. Third column you see is open. Fourth column you see is close. I hope everybody is writing. Is everybody writing? Give me a yes. Give me a yes if you're writing this down. It will be very easy, guys, if you write it down and then compare your candlestick with it. Okay. First column is lowest. Second column is highest. Third column is open. Fourth column is close. Fifth column is the percentage change. And last columns are the current pricing. Now, who will tell me this? How does the percentage change comes in? What do you see when you're looking at percentage change? How do you know that it is down by 0.25%? What is compared to calculate this percentage change? I told you on the very first day, even on the second day, which price is compared with the current price to find out that what is the percentage change today? Why it shows red or green? I have repeated this. Try it out. Okay. 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 Perfect. Perfect. Great. Not with the. Okay. Not. Okay. So I have mixed answers. The correct answer is the percentage change which comes, it comes by comparing the closing price versus the current price. So those who answered that are right. The previous close and the current price. Okay. The price and the closing price, not the opening price. Somebody who said opening price, it's not the opening price. You compare the closing price with the current price, and that's how you know. See, how would you know that today performance is good? Because you will compare it with what was the closing last night and what is the current price. If closing last night was this and the current price is this, which means it is higher. If the closing price was this and the current price is this, then it is negative, right? So it's not with the opening price, it is closing price and the current market price. Okay. It is not with the lowest and the highest either. It's the closing price with the current market price. So now you know. Okay. Don't forget this, write it down. So percentage change, right? Now what you have written in this, exactly what you see in the watch list right now. You'll be amazed. What you see in the watch list right now, the candlestick is the graphical representation of what you see in the watch list. Okay, now let me show you how this works. Look at this. I hope everybody can see the screen. So those who don't have the demo account, just click a picture, write it down what I'm saying, and let me help you out with the demo account. Okay, now see, when you look at the candlestick, look at the green one first. Don't look at anything, look at the green one first. What it shows? It shows the highest of the day, lowest of the day, what was the opening price, and then what was the closing price, and then this movement throughout the day, how the price has moved. And why it is green? Why the watch list had green and red percentage increase or decrease? How do you compare it? You compare it with the current price and the closing price. So what you see in the watch list, a candlestick is the graphical representation of how your watch list, what you look at the watch list, right? So when you look at why it is called a candlestick, because candle has a thread. Okay. Now this candlestick also has a thread. The top thread tells you what is the highest price of the day. The lowest thread tells you what is the lowest price of the day. And then the base of the candles tells you what price it opened and what price it closed. If the candle is green, that means that today the prices are doing better as compared to the previous closing. Okay, let me show you the same thing on the platform, and now it will be very easy for you to understand it because I'm going to show you live here. So you go 3 dots here, open the chart, and tell me, first of all, you're looking at, okay, so let's do it this way. I want you to go to 11th June 2021. And I want you to tell me that what was the closing price on 11th June 2021. Let me give you a hint. It is on the chart and you can see it. It is on the chart. Tell me what is the closing price on 11th June? What was the gold's closing price on 11th June 2021? Okay, use your charts, guys. Use your charts. I'm getting answers, but I want everybody to participate. I want everybody to participate in this because it is really, really important right now for you to see it. Okay, go for it, guys. I see all 30 people right now. I want everybody to tell me what was the price on 11th June 2021. Sorry, I said 11th, right? Closing price. Yeah, closing price of gold. It is on the chart. If you move your cursor, go to the date, you will be able to see the closing price. I'm not moving forward because I'm not getting all the answers. I want everybody to send this answer. I want to make sure that you understand what I'm saying here. Look at this. How just select the cursor on the right side, okay, and go to 11th June and find out that what was the closing price. You can see the highest, you can see the lowest, you can see the candle, okay, and go for it, guys. Okay. Started getting answers. Okay. Somebody said 1899. It's not 1899. If you're saying 1899, then check the cursor. Use the cursor. Go to extreme right. Okay. Extreme right in the bottom and select the cursor so you can get the exact number. 11th June 2021. Closing price. It on the left hand of the chart, it shows C, which shows the closing. It is mentioned there on the chart. You should be able to see it by now. 1902 is not the closing price once again, but I know what you're looking at. 1902 is the highest, H. Look at this, guys. Look at this. Look at these left banners here. So when you move your cursor to 11th June, it shows you what price it opened at, what was the highest, what was the lowest, and what was the closing price on 11th June 2021. I hope everybody gets this now. 1876, right? I've started getting answers. So those who saw the mistake, please correct it. You know what to do. Okay, one more example. One more. Tell me. Okay, I'm going to zoom out. Okay. On 9th November, tell me what was the highest gold went in the day and what was the lowest gold went during the day. Highest during the day and lowest during the day, 9th November 2020. Write this date down on your notepad so you can see it later. 9th November 2020, what was the highest price gold reached and what was the lowest price gold reached at? Highest and lowest. 9th November 2022. 9th November 2020, sorry. Highest and lowest. Tell me both. Perfect, guys. Go for it. Go for it. I know it might look really boring looking at charts right now, but trust me, I mean, just take it as an interactive session. Okay, let me move my cursor over there so those who do not have the demo can see this also. 9th November, highest for the day and lowest for the day. 9th November 2020. Okay. Perfect. So a lot of you have given me high prices. Give me the lowest prices also. Okay, give me the low price. Perfect. So I hope you can see this also, that highest is around 1960, 1965, while lowest is 1850. There's a difference of $100. What happened on 9th November 2020? Any guesses? What happened on 9th November 2020? Any guesses? It was not 1898. Somebody said 1898 and 1862. No, I can't reach that date. You can if you zoom out. If you zoom out, try to zoom out, and you'll be able to find out the date. You just have to zoom out. Look at this. You can zoom out. Use your minus and plus sign at the extreme right in the bottom, and you'll be able to zoom out and go to November 9th. Just move your cursor and you will find it out. November 9th. Highest 1965, lowest 1850. What happened on 9th of November? Lockdown. Lockdown happened in March to July 2020. Any Fed news? There was no Fed news. Because Fed news back in 2011 would move markets like that. But as of 9th November, something important happened. 9th November 2020. High is 1965. It's not 1880. I will be stuck to it unless everyone gets it right. Look at this, 9th November. Look at this opening 1955, H 1965, which is highest, lowest is 1850, and then closing at 1862. Look at this big candle right here. Look at this. Okay, let me zoom this candle for you. Let me zoom this candle for you. 1 second. How do I do it? Like this. This is 9th November. Look at this big candle right here. Okay, I hope everybody can see this. Look at this big candle, such price movement. Look at this. Look at this. Look at the range from 1850 lowest to highest 1965. Okay, I got one answer right about what happened. Okay, I got two answers right. So people start finding it. US elections. US election results came out. And during the elections also, we checked that gold prices went crazy. There was a news of vaccine availability also, I think. So that was one reason as well why stocks started going higher. Okay. The US elections happened, vaccine rollout news came out, which means stocks started going higher. But because uncertainty was reduced and stocks started going higher, so gold started coming down. Okay, on the web it says gold bonds were issued. But more than that, I think the important news, because if you see the same time, 9th November, right? If you see the same time, the stocks went up crazy. S&P, Pfizer announced the readiness of the vaccine. Correct. My values are different from yours. Okay, it should not be. If you're looking at 9th November, then it should not be. There is one way it would be different if you're not looking at a daily chart. Because right now I'm looking at 9th November and it says 1 day. So please make sure that it is 1 day, because this candle represents 1 day. There are multiple time frames. So I will come on that. Pfizer announced, if you will check every lower low, get 100 points down in the lowest. Okay. So now one thing which we understand is why this is red again. So let's go back to the same candle. This 9th November candle is shown red. Why? Because what price it closed as, guys? I'm sure now you have the chart so you can see the closing price also. It shows the closing price at 1862. 1862. If you see, and this is Monday 9th November, what was the closing price on Friday? Just day before 9th November. Tell me, on Friday 6th of November, what was the closing price of gold? The closing price of gold. What was the closing price of gold on 6th November? It was 1952. That's right. If it was 1952 and on 9th November gold closed at 1862, so should that candle be red? Should the candle of 9th November should be red or should it be green? If 6th November price closed at 1952 and 9th November the price closed at 1862, then should the 9th November candle be red or green? Tell me guys, the 9th November candle should be red or green? If 6th November closing was at 1952 and 9th November closing is at 1862, that means 9th November closing was less than 2nd November, right? So that explains that why 6th November candle is this much, but it is in green. 9th November candle is so big, but it is in red, because it depends on the closing price. That's why it is red. So tell me then, after 9th November, the 10th November closing. Now look at the 10th November closing. How much is the 10th November closing? So 9th November is 1862, but 10th November closing is 1877. So the 10th November closing is in green. So that's why the candle is green. Now, as compared to 10th November, 11th November, the closing from, so this was 1877, 11th November closing is 1865. So this is red. Again 1877, so it is green. 13th November closing is 1888, so this candle is green, right? Everybody understands now why the red and green happens. Everybody understands. Everyone, every single person. I see 42 people here. All 42 people, do you understand why it is red and green on the chart? And what is the significance of the closing price when you compare to the current price, right? Now you understand. Now you understand at least why you are looking at the chart, why these are red and greens, right? These are red and greens because you compare the closing of the day as compared to the previous closing. Those who did not understand this, do not worry. I will have a one-on-one session with you. Just book your time tomorrow or over the weekends and I'll be available and I can break it down in a much simpler way. Now, another thing which you need to understand. Right now you are looking at 11th November, 10th November, 9th November, which means each of this bar, each of this candle represents what? It represents every day, right? So if you see red, this is 9th November, then you moved on 10th November, you moved on 11th November. So you are looking every bar as a day. Now imagine that instead of looking at day on day, if I want to see how it is happening, how gold has moved every second, what do? This is going to be crazy. Because right now, look at this on your chart. All of you, look at this chart. Right now, you have been looking this bar every day. But when you click on one day and select, instead of day, select 1 second, what happens? Now you will see gold prices changing every second. Do this. It is not relevant. Okay. You will never look at a second chart and trade. But I want you to change this setting from 1 day to 1 second, and then you will understand what's going on. Do it and try. Try to change. How do you change it? You go here, which is 1 day. Okay. Earlier it was like this. So you're looking at every day. And now you're looking at every second, which means every second there is an opening, closing, high, low, opening, closing, high, low. So today, if I ask you that 2 seconds ago, what was the highest, what was the lowest, you can tell me, right? Everybody, have you changed your intervals from 1 day to 1 second? Send me a yes or a no. If you're not able to understand it, send it to me right now. So I'll demonstrate you again. How do you change it? Because now you're looking at, earlier you were looking at every day. Now you're looking at every second. So now you see a high every second, a lowest every second, and then it changes after every second. Every new second shows you the highest and lowest. Every new second, highest, lowest, opening, closing, every new second. Okay, there's a question. The gold price from March till April was below the line. What could be the reason to that? Uh, Gold price from March till April was below the line. As you just if you can tell me which line we are talking about, so it will be easier for me. Okay, let me tell you how you. So there's give a demo again. Okay, right here, right here. So earlier I was looking at what? I was looking at interval, which was 1 day. 1 day means 1 day doesn't mean that today, as in you're not looking at the duration of just 24 hours. You are looking from last 2 months, how gold prices have moved every day. How do you interpret this? The history which you see and the interval which you see are two different things. History 2 months means you're looking at last 2 months. Interval means in last 2 months, every day how gold performed. So when you click this 1 day and change it to 1 second, now you're looking at in last 1 minute how every second gold prices have changed. Is it clear? The price was around 676 for this month. No, I think something is wrong. I think you're looking at either Tesla's price, because gold price is 1784. So just check please this once again. Okay. Look at this, right? So now you understand that every second how it moves. Okay. And by the way, if you see, I don't know how many of you noticed, gold price now is 1784. It took a low of 1777 while we were talking, and now it is back to 1784, $7 up. Right? You see how volatile, how fluctuating the market is. Okay. Now, similarly, again, another practice, how you change it to 1 second, you can change it to 1 minute, which means high, low of every minute, opening, closing every minute, and it changes after every minute. Similarly, you can do it for 15 minutes. Similarly, you can do it for every 4 hours. Look at this. How the price movement shows every 4 hours, the highest of 4 hours, the lowest of 4 hours, the opening and the closing. And if you see, if you move your cursor, you will see the timing also. Because look at this, 18th August 2021, this is 11 a.m. And as soon as you move to different candle, it shows 3 o'clock, which means 11, it starts 12, 1, 2, 3. 4 hours after, this changes, and then this candle starts at 3. And then another 4 hours, 4, 5, 6, 7. Look at this candle. Now this has started at 7. What is the time right now? 7:57. So for until 11 o'clock, the price will continue to move till 11 o'clock, and this candle will continue to be, and at 11 o'clock, this candle will change. And if the closing price of this candle is higher than the previous 4 hours, then this candle will end in green. But if the closing price, like closing price of 4 hours before was 1781, so if closing price of this candle is below 1781, then this will end in red. All we have to do is find out at 11 o'clock how it was, right? Okay, now comes the interesting part. Now, when you have understand what the candle represents, let's try to understand how you determine your entry and exit. Okay, this is the most important part. So do not leave until you understand this. The most important part about this is something what we call as support and resistance, which means, okay, yeah, okay. Now, how we understand, how do you enter an exam? And I'm telling you a very easy thing, okay? Something really easy, which is as easy as determining how. So if you look at a chart, just look at this. Where is it? Here. So again. Okay. Now what I'm going to do is, everybody in your chart, just select the interval 1 day, so I can see daily candles, okay? And just zoom out until you start seeing, okay, last 2 years, for example. Last 2 years. Now I will tell you, in fact, go back till, last 2 years. It starts from 2020 January, 2020, the year which we all want to forget. So you will be able to see that how gold prices moved from January 2020. I hope everybody can see in their chart. Is everybody right now selected interval 1 day and the history 2 years? So you can see your prices from January 2020 till date. Everybody is there? Everybody with me? The interval 1 day and the history 2 years. Okay. Okay, all 42 people, everyone, all 42 people. Okay, perfect, perfect. Go for it. Now, what you are looking at is gold prices. And don't get surprised. I know what you're looking at. I'm sure everybody now must have seen. Look at this. 6th March 2020, gold was 1695, 1700 almost. And till the next 3 days, gold fell from 1695 all the way down to 1455, and then again bounced back all the way to 1695, and then continue to go up by July 2020 to $2,000, and then came down. You slowly move your cursor and look at the dates. By November, it went to 1773, bounced back to 1950, again went down to 1660, again bounced back to 1900, and again came down to 17, and again bouncing back to 1797. Now, how do you find a support and resistance? First and foremost, in the bottom of the chart, you can see some options like draw tools right here. Now, draw tools are the tools which will help you identify something really, really common. Okay, now I'm going to do this. Look at my chart first, and then you try on your own. When I click on draw tools, I see something called an SR line, which is the second option. Second option, support resistance. I click on support resistance and I bring this pen here. And now you know what I'm trying to do? I'm just trying to find the base over here. Okay. Look at this. Okay. And tell me one thing, if you notice the same thing which I did, because now you know that all these bars represents every day, right? Because you have selected 1 day here, which means this was when price came to 1679, it bounced back. Again, it came here, it bounced back. Again, it came here, it bounced back. Again, it went here and bounced back. Again, it came here, bounced back. It came here again and bounced back. Again, it came to 1679. And these are different periods, April, May, and then again, it came here and bounced back. And then long period, again, market fell in March 2021, after 1 year of pandemic, it came down 1679, bounced back. Again, 1679 bounced back. And then April, again, March and April beginning 2021. I got engaged on April 2021. 1st April, it was April Fool's. Went up. And then again, after long period of time, big fall in 10th August, 1679, and it bounced back. It looks like magic. What does 1679 has to do? What do you think 1679 is? Why every time gold price comes exactly to 1679 and bounces back? And tell me now, when you are looking at this, are you waiting desperately for gold to come to 1679 or no? Tell me, guys. Right? This is called a support line. This is called a support price of gold. That when it is unable to break 1679, so what I was talking about technical analysis, that it brings that support level. All I'm looking for is a support. So that means if somebody said no, okay, you're not waiting for gold, okay, because you must be on the buying side. So no, those are already on buy. I hope that it doesn't come down. But all I'm trying to make sense is 1679 turns out to be a good support level, right? So obviously, if it comes down to 1679, you will be inclined towards to buy it. Question: yes, it may happen, but when it will happen is how to predict. Now, see, I told you the entry and exit points, right? So technicals, they tell you good entry and exit points. Now, I'm looking at a very long-term perspective. You will ask me, Yogesh, you are talking about 1679. Right now it is 1784. You're talking about a decline of $100. So if it doesn't come, what do? I do not trade at all or what? Okay. Now that's why we choose time frames. What I have shown you, 1 day. But if you're a day trader and you want to close your trades over a day, you will choose intervals of 30 minutes, for example. Now 30 minutes interval doesn't show the same support line, right? It doesn't show the same support line because now you're looking at every candle, which is every 30 minutes. If you look at it that way, look at this. Or when I say every 1 hour, now it is different. When it comes to every 1 hour, this is completely different, right? Completely different. It doesn't show you the same support line. Now, if you see on a 1 hour candle, and you can keep changing it when I'm changing it, 1 hour, or when you say 2 hours, for example, look at this. Now, when you look at 2 hours, again, higher and go for, say, 30 minutes, short term. Now, when you look at these short term levels, look at this. Now, if you see short term, 30 minutes chart, and I'm looking, today is 18th August, all I want to do is just look at last 2 days. In last 2 days, if I have to find out a good support level to buy, what is a good support level to buy? This is one good support level to buy, which is a good support, which is a good resistance level to sell right here. This is a good. So if it comes to 1794 and you are on the buying side, you book your profit. If you are not on the buying side, you put a short sell position so you can make money when the markets fall down. If it breaks 1781, what should be your next buy? Right here. This should be your next buy, 1771. If it breaks 1771, which should be your next buy? Right here. Look at this support line right here, 1749. If it breaks that, then which should be your next support line? Again, I'm looking at very short-term support levels, right? Look at this. 1723. Basically, supports and resistances can be multiple, and it provides you entry and exit. You just have to reduce your duration on the basis of how frequently you trade. If you are a long-term investor, then you should wait for the right level to come before you enter. So this is the biggest mistake which the clients do. A lot of times, a lot of investors, they make this mistake. Do not enter at any level, because the whole point of understanding technical analysis is when to enter and when to exit. So if you have bought at 1784, right here, look at this level. If you bought it at 1784 or 17 right here, 1780, and if your target is 1801, then it may or may not come, because over the last 2 days, you have seen that the maximum gold comes to 1794 and falls down. So you might as well book your profit at 1794. And if it comes down again to 1781, go for another buy. If it breaks it, then buy another at 1771. Or again, look at your risk tolerance and put a stop loss somewhere. If it breaks 1771, put a stop loss somewhere, right? So technical analysis, especially support and resistances, helps you identifying your entry and exit levels. Imagine you're looking at gold chart and talking to someone, and the someone tells you, oh, it's going to go up by, and you just bought it. Now, you listen to someone, or you just felt like, you know what, gold can go up and entered, or you look at these support and resistance lines, check technicals, and then entered. Where the probability of you going wrong is higher? You not checking the support and resistance, or you checking the support and resistance? Just listen to my language. I did not talk about making profit. I did not ask you the question where you are most likely to make money. My language says where the probability of you getting wrong is higher, when you look at the support and resistance or when you not look at the support and resistance. Because this is not about generating profit, this is about minimizing your loss. This is a very good saying, guys. Uh, don't look at making profits. Look at minimizing your risk and managing your risk and minimizing your losses. In between, you might end up making profit. So your aim should not be to generate a profit. Your aim should be how to minimize your loss and manage your risk. And there is a possibility that somewhere in the middle, you might be able to make money, right? So this is the technicals help you to reduce that greed part. Now, I told you support and resistance. How do you understand? How do you determine the trend? Look at this. Very easy. Now, when I'm looking at it, let's look at a bigger time frame so you can see how trend actually works. So I told you that the market, it is an assumption that the market moves in trends, right? So you go to draw tools, select trend. Look at this. Look at this. Every low is on the higher side. If you see, let me show you here by drawing it. Every new low on this trend is on the higher side. Look at this. Every new low is on the higher side. What happens when the trend gets broken? When uptrend gets broken, it is called a breakout. Now look at this. Sell. It just goes down. What happened here? The trend which was going on got broken. So this is called breakout. And this is where you will start your short selling position, right? Because the uptrend has been broken and it just came down. But is it a downtrend? It's not a downtrend. It's not a downtrend. What downtrend looks like? Downtrend looks like when every new low is on, when every new high is on the lower side. What was the uptrend? When every new low is on the higher side. What is a downtrend? When every new high is formed on the lower side. Look at this. This is a new high, but it's on the lower side. New high, but on the lower side. Another high on the lower side. And then another high on the lower side. And again on the lower side. And then again on the lower side. But what happens? The downtrend gets broken and see where the uptrend starts, right? And then for the longest period of time, somewhere you will see that there is a sideways trend with support and resistance begin, right here. Look at this here and then here, where you will be buying it at these levels. See, somewhere buy at this level and sell at this level, right? So market moves, what did I tell you? Either in downtrend or uptrends or sideways trend. And this is how it will continue. Whenever these trends get broken is your opportunity to do the trade. If you're able to identify trade at trend at the right time, it's good. So what do we do here? What is our role over here? Now, obviously, I wouldn't expect you to leave your job and sit in the platform and start looking at trends, right? So that's where the consultant steps in. They're looking at the trends, they're giving you second opinion, they're consulting with you, and that's why it's a mutual understanding. That's why you need a consultant to talk to. Not everything is a DIY. Why we are doing these sessions, we want you to be independent. But why we provide you a consultant? Because we don't want you to be alone. You should know that why you made profit or why you made a loss. You have the right to know it and you have the right to understand it. So tomorrow, if the consultant tells you that you lost money because you are on the wrong side of the trend, then you should know what went wrong. Because if you see this line, it's a downtrend. If you keep buying it here, it's not going to make money for you because you're against the trend. If you're buying at a resistance level, then it's not going to make money for you because you're buying at a resistance. It's going to come down. You should buy at the support line. So that's what technicals mean for you. Okay. This is one of the easiest way to take an entry and exit points. You understand the trend and then you buy and sell at the resistance point. How's that? Make sense? Anybody has any questions on what we have discussed right now? So just a graphical representation, a PowerPoint presentation of what we understood. What is the resistance when the price hits maximum here and comes down? What is the support when the price is down and then bounces back from the same level? See what is happening here. If you see the first thing right here, every support, it reaches to the resistance, and when the resistance gets broken and the price goes up, then this broken resistance acts as a support for the next time, right? So when you find a level like this, a broken resistance can act as a good support for the next time, right? Similarly, a support when broken can act as a resistance for the next time. So all I need you to keep looking at these different charts and try to understand and try to find a pattern. It's really easy. Just pick your. So all of you are here right now. Before you leave, how to calculate target price to book profit? Okay, how to calculate target price to book profit? So what you should do is, and let me see if it works out for you. It's a good question. See, first of all, look at the time frame you're trading at, whether you are a day trader or a long-term trader. Okay, if let's say you know that you are buying it, let me reduce this to 30 minutes and take it to a very short-term interval. Now look at this. If this is 1782, then you know that your resistance is at 1793. So that should be your target price. If you're buying at 1782, 1793 should be your target price as a resistance. Okay. But again, that being said, if you have bought 100 ounces at 1782, then you may not want to wait at 1793 to make $1,000. Even if you're making 500, you covered your cost, just take an exit. So that brings us to the point, what should be your profit and loss scenario? Now, it's a no-brainer actually. If you are risking this much money, your profit should be at least this much. And I'm talking about 2:1 or at least 1:1. If you are ready to take a loss of $50, then you should be willing to at least make a profit of $50. Am I wrong? Am I right? What do you think? Today, if you take a risk of $100, what do you expect in return? Now, if you take a risk of $100, you expect, what do you expect back? Should at least get $100 back, right? So it depends on if you're risking $100. And when I say risking $100, I'm not talking about investing $100. Guys, please be very, very careful of what I'm saying. I'm not saying, so because if you invest $100, expecting $100 is 100% return. I'm not saying that. Please be very careful in what I say. I'm saying if you're willing to lose $100, then you should be expecting to gain 100, which means when you take a trade, you put a stop loss, right? Now, if your stop loss is at least $100, then you should not book a profit of 10 or 20, because if it hits your stop loss, you 100, but when you book a profit of $20, then it's not justified, right? So that is something which you have to find out. Whatever is your loss, at least twice that you should be trying to book your profit. So if you are ready to book a loss of $50, you should be ready, willing to take a profit of 100. Should not book your profit of 10. This is a very classic mistake which the investors do due to biasment. They hold on to their losses, but they book their profits very quickly. And I'm sure every one of you who is here at least once must have done it. You book your profits real quick, but you hold on when the positions are in a loss. It's a behavioral biasment, guys. Do not do that. If you are ready to book a loss at $50, should be at least willing to book the profit and hold on to your position till 50. At least 1:1, if not 2:1. Now, gold, where will go as per the live chart? As per the live chart, in a short-term period, I see 1782 is a good buy, and profit should be booked at 1794. If it breaks 1794, then 1800 levels might come. If it breaks 1782 today, it might go down to 1771. If you look at the daily perspective, here is a daily candle. So if you're looking at, I'm looking at 1 day. 1 day perception is different because I'm looking at 1 day. The good support lies around 1767 or 1771. If it breaks 1771, I think another level which will come is 1729. So if you are a long-term investor, if it breaks 1771, be ready to see the gold prices around 1725 at least. For short-term, 1782 is a buy, 1794 is a sell. That range is going to continue. What we have seen in the watch list as well, you can see it for yourself also. Right? Anybody has, again, guys, as I said, this is not something which you should definitely know, but now you know. Now you know that what are candlesticks, what are chart patterns, how you can identify, how you can change time frames and look at support and resistance. So what we'll do is, and before guys you leave, please remember tomorrow the session will be at 5:30 p.m. 5:30 p.m. Let me write this. Tomorrow session will be at 5:30 p.m. right here. Please do not come at 7. It will be done and dusted if you come at 7. Tomorrow's session is going to be at 5:30 p.m. So please join your links at 5:30 because tomorrow we'll do some live trades when US opens. And tomorrow is the most important day because tomorrow I will discuss with you arbitrage, trading strategies, how to trade in earnings. Tomorrow I will discuss with you all these strategies, what you can do tomorrow. And it is at 5:30 p.m. So please try to do it. There is a question here, more of feedback. Consultants do not really advise, they play safe. See, because it's very simple. It's not about playing safe. I am again reading this out in the live forum. I could easily dodge this question, but I really want to give you a consultant perspective. A lot of times the clients, they completely 100% rely on it, which means, and now you know that this is not a platform which is always going to make money or always going to lose money. There is a reason that why we are conducting these training sessions for you, because nobody can predict 100% assurance. But what happens, clients, they go 100% rely on consultant, which is not right on any either way. We want you to be independent. We don't want you to be alone. So consultant will definitely act as a consultant. He or she will understand the market pattern, but obviously there will be the last decision which you have to make because it's your money. So how much risk to take, how much quantities to take, it has to be your decision, because otherwise you will not feel responsible if somebody is there to tell you that. And that is the only reason that why the consultant does not advise you. He gives you an opinion and you have to act on it. That's why the reason is why I'm doing day on day these sessions, to make you more knowledgeable. You go to other companies, they will just send you levels. They will not do these sessions for you. So that's why there's a reason we want you to be independent. We don't want you to be alone. And that's the reason why we are doing it, right? So, but I'm available for one-on-one sessions. So please come attend more and more webinars and get knowledgeable. And I'm telling you, do some trades on demo accounts. Please take demo accounts and use it well. So you are always understanding the prices. Do your homework. Check your watch list. Okay. Tomorrow we'll meet at 5:30 p.m. We're going to read all these strategies and I'll tell you different strategies. Now you know what is short selling, you know what is buying, you know a bit of fundamentals, you know a bit of technicals. So tomorrow we are going to talk about arbitrage, price action analysis, pair trading, all of it, right? Before everybody leaves, a big word of thanks on behalf of my family, my company, my team here in Century Financials, to those people who are connected to healthcare professional or who are into the healthcare profession, the first responders, doctors, nurses, midwives who have been risking out their lives for us. A big word of thanks. I wish you a great health and a lot of health around you. I hope your family members stay safe during the pandemic. This question, if somebody wants 100% reliance on consultant, they can go to mutual funds. Yeah, exactly. I mean, there are fund managers who do that for you, but they charge you a heavy fee and you can do it yourself. Trust me, you can do it yourself. It's not something worth paying a fund manager so much to. I missed first two sessions, so I need a one more session, one-on-one session. Perfectly. Just talk to your relationship manager and I will do one-on-one sessions with you. Even on Fridays, I'm available. So we'll definitely do it for you. Just book your time period. Please, tomorrow, make sure we will meet at 5:30. You will get a reminder anyways. I'm telling all the relationship managers, but please reach them out, have an open communication. And if you have any doubts, I'm available. I need first two classes and a demo account. Definitely. My email address is yogesh@century.ae. If you have any issues, I'm writing it right here. yogesh@century.ae. on small caps. I have put in block letters, but small caps. Whatever doubts you have, send it to me, and I'll try to help you out. And tomorrow is the last day, so please come, and we'll definitely have this session. We'll discuss strategies tomorrow. Once again, thank you so much. It's been a lovely crowd from day one. You have continued to support me. Also, big thank you to everyone who has sent Google reviews. I'm extremely happy, and thank you so much for giving us a feedback. Please, rest of you who haven't reviewed on Google, whether you like the session, you didn't like the session, whatever it is, please send us a review so we can improve on it. I really want this to work. These are free of cost sessions, and I really like to continue these every month or every 3 months. So please send your feedback, review us on Google, and we'll definitely continue these sessions more and more. My name is Yogesh. You have a great night, and we'll meet tomorrow with more and more strategies. Till then, please be in good health. How do you review on Google? Search Century Financial on Google Reviews and you will find it. You can. Thank you so much.